Hey man, I don't know if this is working. It's weird because YouTube the last couple of weeks their system hasn't been showing me real-time stats and stuff. And now all of a sudden it said like live stream's not available. Like what? What does that mean? So, are you guys around? Is this running? It's very unclear as far as what YouTube is telling me. So somebody say something. Yeah, it's weird. This is weird. Now it's saying like I don't know what it's doing. Yeah, are you really? Like is it here? Are you here? Am I live? It's weird, like YouTube is totally messed up. What's it saying? It says like we're over an hour into the webinar. I don't think so. But anyways, hey, good morning. It's a Tuesday. Got your coffee? Look at this coffee. Look at that. All right. Yeah, okay, good. I am live. Wonderful. Well, thank you to YouTube. Okay, did catch up some stats. So anyways, okay, well, I guess we'll get through. So thank you, YouTube. I guess $1 trillion isn't enough money. But anyways, hey, without further ado, my name is Wayne McDonald. I'm a currency trader. I love trading. Today we'll cover all Forex and foreign exchange currency pairs. Like we'll do the euro, we'll do the Great British Pound, we'll do the US dollar, we can do the Australian dollar, wink, wink, nudge, nudge. Oh, that's odd. And so on and so forth. Yes, we can cover gold. Yes, we can cover oil. Yes, we can cover Bitcoin. Because you're going to ask questions and I'm going to respond. You're going to take notes and everything should be good. So without further ado, let's go. Never matter the fact he's corrupt like a senator. Soul in a rope and you treat it like soap on a rope because my beats and my lines are so dope. Oh, wait. No, that's not what it says. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. So thank you for being here. This is a Tuesday. The Forex.Today YouTube community is now almost 14,000 foreign exchange traders from around the world. So thank you for being involved. Thank you for clicking the like button. Thank you for leaving comments. Thank you for subscribing. And also thank you for being a client of TradersWay.com. They're the sponsor of this community. And if you are benefiting from these free webinars every day, make sure you pay it back, okay? Make sure you visit TradersWay.com. Start by simply opening up a demo account. It just takes a few seconds. It's not a big deal. Less than a minute, like literally less than 30 seconds. You'll be in the back office. You get to see how cool everything is. But you can also download MT4 or MT5, play some practice trades on your demo account. You'll see the execution speed is fast, which is good. You'll see the spreads are narrow, which is good. You'll see the swaps are big, which are good. So there's lots of goodness over there. And of course, you want someone that's investing into your community. So tradersway.com. Oh, yeah. Thank you, T-Dub. Diamonds in the sky. Tradersway.com. Cool. Last night's video was blocked by an X-frame options policy. I don't even know what that is. So anyways, Joan's selling her town if anyone wants to buy one. So it's on a fire sale. Sorry, Joan. Oh, yeah. So anyways, yeah, let's make some money and get you a better town. All right. So, hey, I gave you a challenge. I don't know if you did it. I want to show you, if you didn't do it, how shameful it is. I'm doing this, yes, to rub it in your face and shame you. It's not public because no one else can see you. But in hopes to not push you away, but to bring you closer. Okay? Not to push you away, to pull you up. Because I gave you a big challenge. I said, I don't think you can be a professional foreign exchange trader if you're not willing to do this amount of work. So I want to show you, I said, and by the way, I said just doing it is what mattered most. I said you might have a lame-ass excuse where I don't understand what it says. It doesn't matter if you understand what it says. The fact that you're doing it makes you better than 95% of other traders. So let me show you how simple and easy this was for you. Okay? So as of today, this was released. Reserve Bank of Australia. The statement by Philip Lowe, Governor. This is their monetary policy decision. You ready for this? Look how long it is. 8 paragraphs. At its meeting today, the board decided to maintain the current policy settings, including the targets for the cash rate and the yield on the three-year Australian government bond of 25 basis points. So let me translate this. They didn't change anything, and the interest rates are still 0.25%. That's not too difficult. The global economy is experiencing a severe downturn as countries seek to contain the coronavirus. Many people have lost their jobs, and there has been a sharp rise in unemployment. This is very plain English, people. This is not crazy economics and calculus. Over the past month, infection rates have declined in many countries, and there has been some easing of restrictions on activity. If this continues, a recovery in the global economy will get underway, supported by both the large fiscal packages, which is the government spending, and the significant easing of monetary policies, the lowering of interest rates, or the increase of money supply. Global conditions in the financial markets have continued to improve, although conditions in some markets remain fragile. Volatility has declined, and credit markets have progressively opened to more firms. Bond rates remain at historically low levels. Those are yields on bonds. Okay? The Bank of given these developments, the bank has purchased government bonds only on one occasion since the previous board meeting, with a total purchases to date of around 50 billion. So the RBA has increased the money supply by at least 50 billion. Now, you're thinking, well, the 1 over R plus E. So I don't know if they've messed with the R and the E and all that kind of stuff, but let's just say at least 50 billion, okay? Which tends to, right? Anyways, it's only 50 billion. It's not a big deal. Okay, the bank's market operations are continuing to support a high level of liquidity in the Australian financial system. Okay, so anyone that needs money can get money. It's easy. The Australian economy is going through a very difficult period and has experienced the biggest economic contraction since the 1930s. In April, total hours worked declined, and more than 600,000 people lost their jobs. Household spending has weakened. Investment plans are being deferred. Okay? So that's bad. So we have to figure out what matters. Notwithstanding these developments, it is possible that the depth of the downturn will be less than earlier expected, aka not as bad. The rate of new infections has declined significantly, and some restrictions have been eased earlier than previously thought likely. And there are signs that hours worked stabilized in early May. There has been a pickup in some forms of consumer spending. Green shoots. The substantial, coordinated, and unprecedented easing of fiscal and monetary policy in Australia is helping the economy through this difficult period. So they're patting themselves on the back. It is likely that fiscal and monetary support will be required for some time. Interest rates are going to be low. They're going to continue buying bonds. Okay? This is like the difference of your cabin up in the mountains is being threatened by a wildfire. And there's a difference of no one's coming to help to protect your property. Your life's not damaged. You're not even in the cabin. You just own this cabin. Okay? But there's a difference between like no one's coming to save your property or that the area is surrounded by firefighters and they're bringing in planes and dropping water everywhere. You're like, okay, well, we'll probably get through this. Everyone is doing everything they possibly can, so that's good news. You understand? The board is committed to do what it can to support jobs, incomes, which is funny because income should be plural anyways, and businesses, and to make sure that Australia is well placed for the recovery. Its actions are keeping funding costs low, aka low interest rates, and supporting the supply of credit to households and businesses. Liquidity. This accommodative approach will be maintained as long as it's required. The board will not increase the cash rate until progress is being made towards full employment. And it is confident that inflation will be sustainably within the 2 to 3% band. They are not going to raise interest rates for a very long time. Okay? Was that too difficult? I took way longer than what's required to read that. Was it too difficult? Was it too much work? Was the language too complicated? No, 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 no. Should you be reading this? Okay. And the next thing is what is the most important aspect of the world? So let's go back. Let's go back. Okay? Okay? When we get to about here, this is coronavirus. The stuff on the left is coronavirus. Not all of it, but a lot of it. Okay? These spikes down. Why? People are freaking out. Zombie apocalypse. If you remember me laughing about it all that time, the zombie apocalypse, right? What mattered most? Like, is the Australian economy recovered? No, they're saying this is the worst condition since 1930s, since the Depression. But we're starting to see green shoots of recovery, so we've probably hit the bottom already. Now, in this period, I said when the market recovers, it's the market now, not the economy. When the market recovers, it's thinking 6 to 12 months in advance. Okay? Okay? This is why I'm telling you over and over and over again, reading economic data Individual data points is irrelevant. This is why I say CPI, PPI, PCE, NFP, GDP, none of it matters unless you're using the trends in that data and then extrapolating that or interpreting that information as to what policy the central bank is likely to implement because of those trends, not because of one CPI number. And remember, the reason I'm telling you this is you get sales pitches all the time, at least it used to be, that all you need to do is trade CPI coming up and you're going to get rich quick. Boom! This is what you need to know. And even worse, they'll say it's fundamentals. No, it's not. It's a data point. And they're hyping you up, right? Getting you all hyped up. But in fact, it's actually irrelevant. Okay, so you interpret what the central bank's going to do. And in here, the central bank lowers the interest rates to almost zero and starts buying bonds, which is an extremely unique situation for Australia. And the market recovers. Why? Because economic data is better? No, economic data is bad. So why is the Australian dollar strong? Well, first of all, their central bank is willing to do whatever it takes. And what else? Australia is still in business. The country is exporting. Okay? Proper balance of trade. Okay? If the RBA said there was nothing more we could do, there'd be a different situation. Okay? Pundit says, yeah, so wouldn't a low Aussie dollar, Canadian dollar, Kiwi dollar be beneficial for commodity currencies? Well, yeah, sort of. Like commodities very often are priced in US dollars. So, but if you have a whole bunch of it, that's going to be good for your, right? If your country is just sitting on these natural resources and you can pull them out of the ground and sell them, then yeah, demand for your currency is going to go up. Okay. Okay. So, yeah. But at some point, the Aussie dollar is going to be higher. Okay. Yeah, China ramped up trades with Aussie, and you'll notice that the yuan is actually quite low right now. Why? They're flooding the world with it. Why? Because they're exchanging their yuan for Aussie dollars, let's say, and then buying Australian commodities. Okay? So I would pay attention to two things if I was a fundamentalist. One, balance of trade for an exporting country. And two, the policy of the central bank. They're stimulating the economy as best they can. Okay? And the balance of trade is exaggerated right now because Australians are buying less from overseas. And they're actually selling more than a year ago to customers overseas. So their E is up and their M is down, right? Because what we're talking about when it's balance of trade, we're talking about X minus M. Okay? So if X is up and M is down, that's a huge differential that would drive this up. Okay? KG says it wasn't that long ago where USD, Aussie dollar and US dollar were parity. Well, what has changed since then? X has gone up, and at the very least, M is the same. But probably more recently, since the coronavirus, M is probably down because spending is down. Remember that piece in the RBA statement that consumer spending was way down? So that means currently, and it's very short term, over the last 3 months, it's a blip, right? But anyways, X has increased year over year, and M is significantly down year over year. And so that gives you a lot of this. Okay. See, if M was up, so like this is a here's an economics quiz from like one of my classes. Okay, X is up and M is up. What happens? And you have to do the math to figure out to which degree did one go up and one go down. So if X is way up and M is a little up, okay, then the Aussie dollar increases in value. If M is up and X is up the same, then Aussie dollar is neutral. Okay? And what we saw before, right? What we saw, let's say like last year, let me change the color here. What we saw last year was X was down, M was up, and the Aussie dollar was down. So, you know, economists get caught up by how much, right, relative to each other, the X and the M. But for you, the math is a lot easier. It's just like Australia needs to be exporting. That's it. Okay? You don't need calculus. So let's zoom in here. Do you remember when I drew this on Sunday? I said this is the likely exit. You can tell because I drew a giant X. Also drew a giant up, down, and up. Okay? Now check it out. The timing is off, but check this out. I did all right. The timing is off. I'm a day late on the timing, but now we're up here, which I drew again on Sunday. We were way back here, yo. Okay, so now we're approaching the X, which is the big question mark of what are you going to do now? Yeah, Daryl, it's not a lot, but it's positive, where for quite some time it was negative. And I showed you guys that multiple times. I showed you last year that M was greater than X and the Aussie dollar should be falling. I said, this is really strange. I mean, it's horrible for Australia. So for it to change, we have to ask ourselves, going back to the X minus M part, we have to ask ourselves when, as currency traders, and we're trying to place a value on the Aussie dollar, and more important, a future value on the Aussie dollar, we have to ask if balance of trade is positive, is it because they have more customers buying their stuff? Or is it because Australians are so poor they can't buy anything? There's a big difference, right? We have to figure out inflation. This is different for every country. So for example, if you compare South Africa to the United States, okay, and let's say in an inflationary scenario here, well, anyways, I don't want to get caught up in this, but very often, because they're emerging markets, they're moving in opposite directions. The same thing causes the opposite consequence. But anyways, let's just move on. What's the top end? Try to take a guess. What do I use to predict where to exit? What do we use to... Okay. No, not really. You can, but... See, I don't like that per se because you're betting on some sort of golden ratio. I mean, those are helpful, but you might draw your fib one way and someone else draws their fib yesterday. No, it's pivot points, of course. Okay, pivot points. I don't have them here. It's probably pivot points on a different time frame than this. There might be weekly pivot points. Okay, but here's here's the thing. People in my swing trading group that met with me on Sunday, I said, there's nothing on the charts that suggests what I'm about to tell you, but I'm going to tell you based on, you know, years and years and years and years and years of observing the market. And I said, based on my experience, everything bullish, let's say everything risk on right now, is going to be more risk on than justified. Or I don't think I used justified, but it will be unusually over bullish. Okay? So there's nothing there to suggest this except my experience. Nothing technical at all. No technical analysis said this. But I said, I think they're going to move up. They're going to move up fast. They're going to hit their targets early. How many people can confirm that? Right on ABS, but by the way, 100 pips on pound yen, that could be a mistake and you make 100 pips. That's nothing. Okay? Now, I said in normal operating procedures, you're going to wait for normal pullbacks and you're going to look for good prices. And I said, you're not likely to get good prices this time. And I said, but don't miss the trades. Does anyone remember how to catch the moving target? What did I say that you should do? If you're not going to get a good price, what do you have to do to manage the risk but still get in the opportunity? Thanks, Jules. $21 EMA, yeah, that's not the answer. That's not what we discussed in the group, but yeah, that's helpful. Sure, men in action, for sure. Take a smaller lot. Well, that's not how to get into a trade. That's how to manage your risk. Wait for a reversal? No. All right, let me just say it then. You got to drop into smaller time frames. So I said use your monthly to stay with your bias, but you're not likely to get the entry you want. You're not likely to get a good price. So drop into your weeklies and drop into your dailies. Daily pivots. Remember I said day trade your monthly swings this month. And then get ready for an abrupt ending to your wonderful trend. Okay? Okay? You guys remember that now? Day trade your way through this until you hit the monthly target. Yeah. So like euro dollar is a great example here. We'll just pick euro dollar. These are day trades for a bull. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Okay? Up, 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 down, down, buy. Okay? And we're going to work our way up until you hit a monthly target, and then you need to throttle back. Okay? And I don't have the monthly on here. I guess I could throw one down. Well, you know, maybe the better way of doing this is this way. Oh, grabbed the wrong one, of course. I'm going to change this from daily. Those are the daily ups, and I'm going ideally for the monthly target. And so you want to day trade your way up. Oh, hang on. I go back to bias pivots. I'm going to turn on. Oh, it did plot it. Okay, cool. Okay. We're on our way to 113 to 114. Okay. Okay. Now, what else do you remember? We're going to be up here somewhere between Wednesday and Wednesday. Do you understand, like, this is me predicting the future, and we've done it days ago, and I'm trying to explain why, and that almost none of this information I'm highlighting here has anything to do with the technical indicator on your chart. KG, I don't know, next couple of months maybe, end of summer. Well, I'm trying to make a very clear point here, right? Technical analysis alone is not enough to sustain you. You need more sustenance. If you're going to accurately predict the future, you have to pay attention to even more data. Technical analysis is great. You should really know some fundamentals about global macroeconomics and where we are in the business cycle, the supply and demand of money globally. And the cool thing is, you're actually told that information. The RBA told us what's going on and what they intend to do about it. Do you understand that? Like 20 years ago, it would have been a secret. 20 years ago, there might not even been a press release. 30 years ago, there was no press releases. There were no meetings. Like when I'm talking about the Fed, when we're talking about Paul Volcker in the late 1970s, you know what? You would guess the Fed did something when the market crashed, or like not crashed, but spiked one way or the other. You'd just be looking at your charts and all of a sudden, wham, the dollar just, and the interest rates go nuts. And you're like, holy crap, the Fed's in the market. Okay. And then under Greenspan, they said, well, we should probably do some meetings and we'll sort of explain what we're doing and what our intent is. And then there was a new radical approach to central banking called inflation targeting. And almost every central bank on the planet said, oh, we don't do that. We don't do that. It was too radical to say what the RBA just said. Oh, you know, we're looking for 2 to 3%. So when I started, that was a radical notion. I have books talking about inflation targeting. The new of central banking. Okay? Right? And now we're to the point where the RBA is telling you what's going on and what they intend to do about it. They're giving you the Aussie dollar, putting it in your hand. Okay? So that's one thing you need to know off your charts. But the second thing you need off your charts is to understand what other people are going to do. And the only way you're going to understand what other people are going to do is when you understand how to trade. Right? Okay? So what I'm talking about now with this up, 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 down, down scenario has to do with humans. That's a behavioral finance issue that I'm incorporating into the trade plan. So don't start looking for like, is that PSAR that tells me what's going to happen? No. Okay, so anyways. But don't make a big deal out of it. Ultimately, what you need to do is like all of that is helpful information, which means you anticipate. Just because you anticipate an ambush doesn't mean there's going to be an ambush. You just know where to not walk, right? Right? As a young platoon leader, you know, you walk in, you're like, ooh, this could be bad. If we get ambushed here, this could be really bad. Doesn't mean there is going to be an ambush. So you're like, let's go a different way. Let's take a different route. Okay? So in this case, you can anticipate something up there like there's an ambush. Quite literally, right? Bears are going to change the direction here. But what you could do is say, well, I know it's up there and I know it's a danger zone, so I will watch that carefully. Meanwhile, these green zones here, those are where you're supposed to be buying every day. Okay, every day. Okay, Asia fade down, London boys up. Asia fade down, London boys up. Whoop, 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 whoop. Something weird going on here, and then boop. Okay, New York took it up. Then Asia fade, London boys took it up. What do you think is going to happen tomorrow? Asia fade, London boys take it up. What's going to happen the next day? Asia fade, London boys take it up. And if you see one of these, take your profit, go away. So you got to watch this first. Don't get all fearful. Just understand where an ambush could happen and take precautionary measures when you approach that area. So right now, right? I mean, there's so many other ways to trade this besides daily pivots. Okay? So let's say up, 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 up. Take the roll reversal. Once you make the higher high, drag this across and say there's a buy zone. Cool. Down, down, right? Up, 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 up. You got a new higher high. This is habitual for me. Oops. I do this all the time, over and over and over and over again. I'll mark this and say, if we get a pullback there, I would be a buyer. Did we get a pullback there? No. Cool. Right on. So it goes even higher. Okay. Comes down. Okay. Up, 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 up. So now, in the future, I'm going to pay attention to this area. Okay. For a buy zone. Oh, it has value, KG. I know. So much value, it has no value. Yeah. Morning, Reb. Okay, so in this time frame, it should look pretty easy, right? Okay, here's your breakout, and you want some sort of pullback. Okay, the question is, was that enough pullback for you? If you're already a bull, what price do you want? Okay. I'll give you a hint on this. What did we talk about yesterday as being the spot where a bear would sell if there were bears? And by the way, let me highlight that. I'll do it this sort of yellowish color. We were here. Okay. And I showed you where bulls would buy and where bears would sell. In fact, we were, oops. You can see the markings, right? Remember, there was the buy, there was the sell. Okay, battled it out for hours and hours and hours and hours and hours. Check that out, guys. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. You know, almost 17 hours inside my little zone I drew on a 1-minute chart. Like, son of a biatch, huh? I drew on a 1-minute chart, a buy area and a sell area, and it held for almost 18 hours. And then the London boys came in and bought it on the low end. They bought it in the buy zone. Look at it, guys. It's sick. Okay? But what we talked about, guys, fellas, ladies, okay, is that bears are going to sell in this zone here. That's what these lines were. And we were joking about Maida. The Maida's ready. She's going to take this down because she's a bear. And she's ready, willing, and able. Now, she might have sold it here and was profitable for a while, but it didn't work. Then she tried again here and might have been profitable for a while. It didn't work, but she's going to try again and again and again. That's what a bear does. Okay? But now we're up here. So what do you do as a trader? What have you been taught? What's your response to this as a bull? Now, a bear just busted out break even. How does a bull respond to this? So remember, buying here is all right. Buying here is all right, but not desirable. Buying here only if it's the London Open kind of thing, right? That's sort of your 4-hour, entry. Wait for the pullback. Correct. So if 1.1 and a half, do you guys remember this? 111 and a half was the sell zone that we described right here. You guys remember that? This was yesterday. So what happens if you breach 111 and a half? It's in the training course. I cover it almost daily in these webinars, right? It's probably in the price action course. It's probably in the technical analysis course. It's probably in the swing trading course, but it's just basic price action. Okay, wait for a bull pullback, but what kind of, right? We call this a roll reversal. Simple price action and technical analysis 101. You have to know this or you will go bankrupt eventually. Right? Standard operating procedure, in fact. ABCs. So now what happens is you take this across, because now you know the bears are out. The bears took a walk, because I also know where the bears are going to be the next level. They're going to be up there around 113. You understand? We've already covered all this yesterday and the day before. It's all there. So now that the bears tried to defend this 111 and a half, it's been breached. So now you simply look for a roll reversal. Okay? You'll say, well, Wayne, it only hit 111.55. It didn't hit 111.50. Well, that's your call. That's right. But the thing is, now you got to be ready, willing, and able to catch the dip and push it up. Okay? So you have to be ready, willing, and able. It's not that you predict this move, okay? Okay, you can't predict that move. Well, you can predict that move, but I'm not suggesting that you have to predict that move. But once you have that, you must 1,000 times over predict this and that, or you will not succeed. That is a must. Because that happens in sideways markets, that happens in upward markets, that happens in downward markets. That's price action 101. You have to anticipate that. In fact, what I teach you is, the green candles are not what you're buying. You're buying the red candles as a bull. What's special about 111 and a half? It's a midpoint psych level. So I think it was about 3 weeks ago, I did training specifically on psych levels and midpoint psych levels. And I'm like, they're so important that that could be one of your only things. The midpoint psych level and the psych level. The psych level being 111, 112, 113, 114, 115. For example, do you think 120 will be important if we get there in the future? The psychological level of 120? 1.20? New trader, that is basic fundamentals, and it has nothing to do with Europe. That's the interesting thing. It has nothing to do with Europe. Okay. Yes. So 120 will be important. The reason these are important is, one, there's some computer programmer somewhere going, click, 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 1.200000. It's in the algorithm. Okay? The other thing is that every single one of us, no matter what technical indicators we use, or maybe you use no technical indicators, you just have a blank chart, you see these price levels. Okay? So you got like super psychs, 110, 120. And you know what? Like 115 is sort of interesting, but 125 for some reason is more interesting. Why? Humans place some importance on these levels. Like, there used to be a time like, will the dollar, will euro dollar go to parity? Will there be parity? Parity, parity, parity. I'm like, who gives a two hoots about parity? Well, of course humans do, but the market doesn't. Like, right? So whatever. So we place these importance. So whatever you think is psychologically important is psychologically important because everyone else is thinking it's psychologically important. So the easy ones are 110, 120, 130, 140, 150. But like, would you agree like 120 is important? But what if euro dollar went to 2.0, 2 euros per dollar? 2.0 is important, right? Just as parity is important. Well, what if euro dollar dropped all the way to 1.0? That would be psychologically huge to a human, but not to a squirrel. Right? Not to a white-tailed deer walking through my yard eating my roses, and you're like, hey, euro just hit parity. And he'd look at me and go, not important to that guy. So we make this important. So now I take that to a level. So you have to understand 110 is more important than 111, but whatever. But 111 is more important than 111.8. So then there's midpoint cycle levels, 11.5. Because in day trading, right, what we do, day trading, intraday trading, scalping, that kind of stuff, right, when you're trying to make 100 pips, imagine, right, that, so let me try to draw this in a different way. There's an interesting thing, the way that price behaves. So let me scrap all of this and let me start anew. I think that's a French word. Okay, so you got 1.00, 1.2. I'm not doing euro anymore. I'm just saying on this scale. So I'm saying 20 pips, not 200 pips, right? 1.5, 1.8, 2.0, 220, and then let's go even less. Let's go 80. Let's go 50. So these levels are important to me for different reasons, but it comes down to price action. Okay. So price goes from 20 to 50, and there's a little bit of profit taking. Then it goes to 80. Now we're getting pretty close to 1.0. And typically there's a little one, and then you hit the cycle one, and then it comes down. And then it goes to 2.0. Then it comes back down to 1. And then it goes right to 2, up to 150. Okay? Then it goes up to 182. Then it comes back to the 80, breaches the 20, comes back to the 2.0, and goes on. Okay. And this happens to do with the ebb and flow. So to get beyond 20, you probably bought it right around the retest. So, right? So now imagine there's a zero line. We had to get through the zero line and then buy the dip back at 20. And then it goes from 20 up to 50. Okay, that's what I'm suggesting in here. Now, as you look at this, imagine where someone would put their stop. And it's very interesting because this will play out both sides. But you put your stop, this is going to get difficult to train, but how am I going to do this? The stop gets interesting. Part of this is the stops and where people will put stops, and then of course reversals happen when the upward move collapses, and the first part is the stops being hit, right? So if you bought somewhere between 2.0 and 00, your stop is going to be around 75. And it comes up, and then it comes down, you hit 50, and then it drops, okay, and then up. So now if you're a buyer around the 80 on this little move, your stop's got to be below the 50. And then it goes to 120, it comes back, right, to 110. So now you're a buyer at 110 because now we went to 120, back down to 110. There's your breakout roll reversal scenario, and your stop's going to be below 75. Okay, your stop's going to be here. And you just traded a thing from, let's say it went from 50 through 80 to 100, down to here, then it went up to here, then it came down to here and here. So you could be a buyer here or you could be a buyer here. Either way, your stop's going to go here. Okay, so on and so forth. You keep doing all of this until you hit a point where this comes down, and guess what happens? You hit all these stops that were up here, and those stops get not only pull the bulls out, but pushes the bears in. And now you get this move because you know where the buyers are going to be, and you know where the stops are going to be put. So the reason I play around with the 20 and the 80, the 20 and the 80, is not really technical analysis up. They're not support areas. It's where most people will put their stops. Okay? It's where most people will. So it tells me where my vulnerabilities are. So if I was a bull, I have a choice around 2.0. I can buy the dip at 90 and throw my stop below, let's say around 75 or 70. I know 65 is stupid, and even 70 is stupid. So I'd probably buy it around 95 and put my stop around 75, knowing because I'm in an uptrend, I'm likely to break 2.0. And then when 2.0 breaks, we're going to go to 220. Then it's going to come back down. And then I could re-enter on the roll reversal. But why do I know it's going to come down? Well, bears, right, are selling around 2.0. Now, there might not be any technical reason, but there's always going to be a dumb trader doing a dumb trade. So they're putting their stops here. And if you reverse this whole process, right, if they're selling at 95, their stop is going to be at 25, which is where I was telling you here, a bull, if they bought here, their stop's going to be at 75. So the equal and opposite to that is 25, which means now if I buy this dip, because I'm betting on the trend, if we can get it above 20, we're going to hit all the bearish stops and we're going to get pushed right up to 50. Okay? So ultimately, the 20, the 80, the 20, the 80, the 20, and the 80, those are just telling me where the vast majority of stops are going to be, irregardless if you're a bull or a bear. Because, for example, let's use yellow. If bulls are buying near 2.0 and bears are buying at 2.0, bulls are going to put their stop there, bears are going to put their stop there. And then they battle it out. But that's why 2.0 is very important. And you're not going to get as much battle over 150 as you do by 2.0. And again, I don't mean 500 pip difference, I mean a 50 pip difference, right? So as far as setting up trades, okay, I don't look at 20 and 80. I don't look at 20. I don't, right? I don't look at 80, right? I know that this is going to be the basis of most entries. Okay? Up, down, right? Up, Okay? So it turns out midpoint psych levels have a minor role. Psych levels have a major role. Minor role, major role. Okay? And I can anticipate in advance where certain challenges are going to be. And so if you breach 150, it's going to work its way up to the next major psych level. Okay? And then you can also anticipate that aggressive bears that are, let's say, often too aggressive. I'll get a different color. An aggressive bear is they're going to see price come up and they're just going to sell here. Even though the market's been up. Right? You know, it doesn't matter right or wrong. You know there's going to be bad traders doing stupid things up there. Why? There's enough of them. So they're going to sell there, and what I just taught you is you immediately know their stops are going to be around just above 220. Because they're probably actually selling this more like 1.95. And they're like, I bet you it'll hold. Okay? So their stop is going to be up here. So as a bull now, you're probably thinking, right, the opposite. And you're like, okay, right, you want more like this. Okay? And your stop is going to be, right, if you bought here on the roll reversal, your stop's probably going to be near 75, just below 80. So if you're long 2.05 and your stop is 30 pips away, you're going to be at 75. Just like the bears did, okay? And then you'll see how all these play out. Now you got this 80-20 thing going on, okay? And if you breach the 20 to the upside, where's the next challenge? 50, the midpoint psych level. Is it going to be a massive challenge? Typically not, but a bull that bought low is now sitting on 50 pips or 60 pips. What percentage of intraday traders, let's say you bought London Open or New York Open, so you're a buyer, and 2 hours later you're up 50 pips and the session is kind of fading and dwindling. What percentage of day traders walk away with their 50, 60 pips? Well, enough, and you'll get some profit taken. So you can anticipate 50 coming back down to 20 and then going up to 80. Okay. So there's psych levels, midpoint psych levels, and stop placements. Okay? You understand that? You have to understand what the other people are going to do. If you know how to trade, it doesn't matter if you're a bull or a bear, you can make money. So what happens eventually is, if you know how to trade and you're not making money, very often it's because you're not planning any trades, you're just sort of reacting, you don't have a bias, you're all over the place. So you can't anticipate where the ambushes are going to be because you don't even know where you're going. You're just randomly walking around looking for things to do. Let me tell you, that's not the secret to success. Okay? So I hope that was helpful and not confusing. That's why I pay attention to midpoint cycle levels. This is what I was trying to answer. Okay. So let's go here. What we were talking about in this analysis is not down. Everything is bullish here, okay? But this was a very difficult place to trade. And I said, if it did this, then you're out. It's not a short. It's if you're long and it does this, you're out. Everything set here is bullish. But at the time, you know, we were looking at this and I just said, well, not really what I'm looking for. Like, look on this time frame. This is what the charts are telling us. Not necessarily bullish, but notice how we went from one standard deviation below the mean to one standard deviation above the mean to the mean and then through. So at least we can say Bitcoin has become bullish again. Okay? So watch this. Template, swing, price action, pivots. Okay? Now that might be helpful. Since that point in time. Okay? Is that right, Zeno? Are you all right, Zeno? Daryl, it's not an expected change in policy. It has to do with behavioral finance. It's a human issue, not a monetary policy issue, not a technical analysis issue. It's okay. So you have to think about what's likely to happen after the 10th. All right, so there's Bitcoin. So what do we know about this? So if I open up this, we're looking at weekly pivots, and we're looking at weekly market pivots and essentially weekly price pivots. Okay. Isn't it interesting that it did this on exactly that price? Okay. So anyways, typically when you're up here, it's an exit zone and it becomes overbought. Okay, so we have to mark that and recognize that. That's why you got this big pullback, by the way. There was massive profit taking. So let me mark this and then take our analysis further in. Okay. So now we can go here, change the setting, and look at this. Oops, that's what we had. And go here. You ready for it? 3, 2, 1. Kick busted. Doom, doo, doo, doom, doo, doom, doom. Can't stop it. Doo, doo, doom. All right. So there, ultimately, there is the next move. So I said down in here, risk on would be unusually, or not unpredictably, but unusually over. How do you say it? Overbought or out of position. So we got two exit zones. Here's the weekly exit zone, which I've already highlighted. And then there's the monthly, okay? So you have to guess now, using your own alpha, how this will behave. Will it do that? That is plausible. Or will it do this? Okay, that is also plausible. Okay, and now bears might be thinking, well, up here it's overbought, so you should sell, right? No, I would prefer you sell in that upper zone in a downtrend. That's how I'd like you to look at this. Okay, I want you to think that's up. Not a good time for me right now as a bear. That's all I want you to say. Oh, right on, Chris. You should send me an email. Let me know the details. What's going on, brother? That's really cool. Okay. So you can anticipate either here or here where that change would occur. And you can drop into smaller time frames and wait. Okay. It's still bullish on a 15-minute chart. Okay. It's still bullish on a 5-minute chart. Like, you might be early as a bear. You know what I'm talking about? It's still bullish on a 1-minute chart. Maybe you shouldn't be a bear. So on this 5-minute chart, let me zoom in so it's easier to see. I wonder if I can get rid of that. Okay, so what's going on here? Up, 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 down, down, up, 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 down, down. Okay, this one's a tricky one. Probably has to do with timing of the day. Okay, so when you look at this, don't get caught up in the indicator. Get caught up in how you're supposed to trade. Okay, so let's say you bought in here. Your stop is down low, probably off the chart a little bit, right? This is a 5-minute chart. Okay, and what you're trying to do now is manage your stop. So now your stop's here. Okay, and now you can put your stop here. Okay, because I'm looking at higher highs. Remember, this is just a 5-minute chart, so you can get lost in the noise if you don't understand. But what are we most interested in? You bought down here, so what are you expecting? Higher high. Let's do this in pink. You're expecting a higher high. Cool. And you're also expecting a higher low. So you're not really freaking out that this dropped. You're freaking out if it drops below, in which your stop gets hit and you're knocked out. Do you understand? You expect the higher high and you expect the higher low, and that's a buy zone, especially if being a higher low, this low being higher than that low. So you can enter a second trade here. Okay? But you would buy this. Why? Because you're expecting a higher high. Cool. And after you get the higher high, what are you expecting? A higher low. So you get it and you can buy it. And you can put a stop down here, and this stop could be there, and you're moving your stops in all three trades. And now you're expecting a higher high. Is that a higher high? No. Is this a higher low? On a 5-minute chart, yeah, these are just little kind of, it's close. Like, that's why you got to manage your trades. This Could come down a little bit lower and knock out these trades out. That can happen. This one you survive. But what are you expecting if you bought the higher low? Expecting a higher high. Oh, there it is. And so riddle me this. What's going to happen again in the near future? What's going to happen in the near future? I'm going to predict the future for Bitcoin, the most volatile instrument in the world, according to pure mathematics. Whatever, dude. Okay, yeah, there's going to be a higher low or a lower low. And what happens then? What happens if I get an LL instead of an HL? Yeah, I guess I'm done for the day. Done. Catch you at lunch. But the most important part here is you buy low, you expect a higher high, you expect a higher low, you expect a higher high, you expect a higher low, you expect a higher high, you expect a higher low, you expect a higher high, and meanwhile, you know where to trade. You can buy here, you can buy here, you can buy here, you can buy here, and perhaps you just, and you're managing your stop each time. This one's just below, this is just below, this is just below, right? If you bought here, then this is just below and in the future, okay? Because what is the math telling you based on whatever time frame you're measuring? And of course, we're measuring very small time frames here, but what does it tell you? When you're down here, based on the data you're measuring, there's a 95% chance, per se, that it's going to revert back to the mean. And if it doesn't, whoa, what? Then it's statistically relevant. You understand? If you breach 2 standard deviations from the mean, that's statistically relevant. Nacho Zena Libre? Cool. Any not gas ideas? Buy lows, sell high. Hey, look. Okay. Was that helpful, guys? Is any of this helpful today? Here you are scalping Bitcoin on a 5-minute chart. Okay, notice I only gave you buys. Well, A, what direction is the market? That's actually number 2, but what direction is the market? Is that up or down? Yes, please hit the like button. YouTube is telling me there's only 6 likes. Okay. So this market looks to be bullish on this time frame, on this 5-minute chart, right? It seems if you measure the Y equals MX plus B, then statistically speaking, and most importantly is the M, the rise over run looks bullish. So Y is bullish. Okay? This is your Y-axis, your X-axis, and the intercept. And this is the slope of the curve. Okay? So just imagine a grid, basic calculus. Everybody loves basic calculus, right? So you have a vertical line like this. You have a horizontal line like this. Okay? And what we're trying to do is we're saying, okay, there's a slope, there's a line, there's a slope, there's the intercept, right? The X and the Y is on the grid. And then you have to have the M, which is the rise over the run, or in that case, run over under rise, so rise over the run. Okay. So that's all we're doing here. Oops. So based on that simple analysis, we're saying on this time frame, measuring this data set, it's more bullish than bearish. Well, the reason I bring that up is you already know, one, I'm risk on. Okay, which means two, I'm either a bull on BTC or let's just say I'm a bear on dollar. It's the same thing to me. Okay, bear on USD, which means they run along the same indifference curve. You guys remember all this from whenever? So yeah, so right? This is a run along the indifference curve, not a shift in the indifference curve. All right. So that's all set before I even look at this. Right? I'm risk on, therefore I'm looking for opportunities to buy Bitcoin or sell US dollar. And three, now I look at my chart and I ask, what is the market? And more particularly, I'm asking, is the market bullish? Most of you guys log in and go, well, I guess I have to buy, and you buy up here or something. I don't know. I don't know what you're doing. So I go through all of that and I look at this now and I'm like, well, I'm risk on, therefore I know I want to buy Bitcoin and I know I want to sell the dollar. So is the market conducive for me making money today? I look at it, I'm like, oh, it's trending up, so I need to buy dips. Buy a dip. Now, you might not see the dip on this 5-minute chart, and that's the danger, right? You get caught up in the candles. What you should be seeing is not really the candles, is that's an up, that's a down, right? That's an up, that's a down, right? And then you get a little bit of noise, right? And that's an up, and now there's going to be a down, and so on and so forth. And so therefore, I know like this is a buy zone, this is a buy zone, either here or here is a buy zone, right? And in the future, there might be a buy zone. And then, of course, I know where I'm putting my stops. So this stop is below the green. That stops below the green. This stops below the green, right? And now, over the next probably hour, there's a high chance that I'm going to have another buying opportunity. I'm going to, right, end up buying more Bitcoin and selling US dollar. Okay. Rookie says, Bitcoin up, risk off. Okay, well, that's your interpretation. That's not what I think. Okay. But you could probably argue it and you'd be fine. And I'm sure you could argue the same thing with gold. Okay. Because a lot of people say, well, gold is an inflation hedge, which means the dollar is weak. Oh, that's why you're buying it. Well, then gold is sort of the anti-dollar. Oh, well, then that means the dollar's weak and therefore macroeconomics are strong. Therefore, the M is greater than the X for the United States. and that weakens the dollar. And you're like, oh, okay. And then and if consumption goes up, consumption for everything goes up. And you're like, oh, okay, well okay, consumption is up in the United States. Huh. Right? So gold gets more complicated than everything you've ever read. Unless you're like a hoarder, right? If you have a prepper stash in your backyard and you're canning your own tuna, if you have more than 5 years worth of firewood stashed in a storage facility that's dry and free of bugs, you might look at gold differently, and that might, in that lens, is going to interpret things. And I laugh at that because last year and the year before, I bought the only FDA monitored firewood this side of the Mississippi. And it's what they do is they take the best wood and then they put it in a giant heater and they cook the wood, and it kills all the mold, it kills any bugs, it removes all the moisture, right? So it's all kiln dried, and then they stack it, and then they stack it on a pallet, and they wrap it, and they deliver it. And I had it delivered to my house. And this is competition firewood. So no joke, competition firewood, FDA monitored, kiln dried, palleted, wrapped wood. And I was talking to the guy, and I said, yeah, I was thinking about buying two, but of course they're enormous, right? And he kind of laughed because I wouldn't need to. But he says, you know what? He's like, we sell these all the time to preppers. And I'm like, what? He's like, yeah, people will buy like 5 years of this stuff, and we'll send it to Montana on a truck. So anyways, because they're ready for the end of the world, is what I'm trying to get to. They're literally preparing for the end of the world, buying this competition firewood. But they might look at gold differently. But then again, I think you just need bullets and guns. I don't think you would need gold. So. No, Kyle, I'm playing around with this. This is just pivot points based on price instead of market. But nothing you can't do on your own. So right now, Grind, if you're trading gold, you're probably trading inside GDP. So remember, anyways, so we talked about this in the live group, I think 2 weeks ago. We broke down GDP, which equals C plus I plus G, right? Plus X minus M, net exports, okay? And so we were talking about, G through fiscal stimulus has gone up in most countries, right? So in fact, at that time, we were talking about Australia. So we're like, okay, there is some here. X is up and M is probably a little bit up too, but X is significantly up more. Okay, the economy is down, so businesses are not likely. They might even be cutting back on I, but X is up, and M is probably a little up. Okay, G is way up, and then so we're focusing on this. And your gold trade, let's say if you're looking at the United States, your gold trade has to do with increase in C. And when there's an increase in C, there's an increase in consumption of everything. So like cans of tuna fish will go up. Okay. And so will gold. Not that they're related, but that consumption of everything will go up. Okay. Otherwise, you got a micro issue, and that's not likely what's happening. Okay. And a micro issue is the United States makes laptops. Mexico makes bicycles. And they trade because they specialize. And you're like, how many bicycles is one laptop worth? How many, right? How many, if you traded one laptop, how many bikes will you get? And if you do this, you're both better off. And so we're not talking about tuna fish versus gold. How many cans of tuna do you need to buy, 1 ounce of gold? It's more like the demand for everything. Okay? So in this case, right, like I talked about the indifference curve, okay? And here's your demand and your supply. In this case, I'm not talking about a move along the demand curve for these products based on price. I'm talking about shifting the entire demand curve this way to the right, okay, and create a D2. So it's not a move along the curve, it's a shift in the curve completely. And so that's what you'd be doing with C. So your gold, your XAU, is a function, right? A function of GDP. And in particular, a subset of GDP like overconsumption or something. Okay? The value of gold is a function of consumption. So we take all that and you got a bias. Then when I look at something like this, I say, all right, this is going to fall. Isn't that a clever little party trick, guys? We're up here and we're like, okay, this is going to fall. And then when you're down here, it's going to rise. Isn't that really cool? Thank you. I've been doing it a long time, so I appreciate the positive feedback. I am an only child, so I love being showered with admiration and respect. The downside to that is I never forgive. It's one of my weaknesses. I never forgive. I never forget. I never forgive. Yeah, thank you, John. That's why I do it. And you're probably thinking I'm joking. It's just who I am. It's a weakness and a strength, I guess. I have to get out of bed and find a way for people to love me. And as soon as that's over, I'm crushed. So every day I wake up and I'm like, I need people to love me again. So every single day I work my ass off in hopes of earning respect. And by the way, you can't tell your wife you love her too much. It's kind of like that. I'm like, honey, I told you were pretty yesterday, and I told you I love your new hair color yesterday, and I told you I love you yesterday, and I'm glad you're the mother of my children yesterday. She still wants to hear it today. Just a hint, fellas. Just a hint. Wink, wink, nudge, nudge. Just a hint. And women, correct me if I'm wrong, if that's not the truth. Cool, right on, John. Thank you. And yes, Daniel, I read every single one of your comments. You said, like, sometimes, Daniel, you say, Wayne, if you're reading this, blah, 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 blah. Yes, I am. Yeah, I have a feeling Meta is somewhat similar, where I think Meta could be like your absolute best friend. And if you double cross her, you're going to be in a world of hurt. And there's no getting back in the trust circle. Alex is like, yeah, yeah. Pivots, I talk about pivots so much, I'm just sort of done talking about pivots right now. Is that right, John? Cool, man. Yeah. Yeah, several times a day. Yeah, yeah. Oh! Oh! Well, dude, if you look at my history, you're like, you need to look at it like, you can look at it like, oh my God, this guy's done so much. Or you can look at it like, this guy's so insecure he has to do all this crap just so he can get out of bed every day. Right? So it's pretty funny. Yeah, you'll get it, mate, but I'm just testing it. I'm just playing around with it. But when I release it, anyone that's got the MetaTrader stuff can have it. Compliments of the firm. Right? But anyone with a track record has to be somewhat insecure. Every single professional money manager should be insecure about not hitting their targets. They should be afraid all of the time in a way that forces them to do what's right, not like panic mode, but a focus, right? You should always have this focus. But yeah, insecurities, like, dude, I could have gone to the local college and got a master's degree, and my children still would have seen me do homework. I still would have achieved my goals of inspiring my children to work hard and dedicate and focus, and not just all of that, actually achieve success. But I chose to go to Harvard. I could have just gone to the local one, and right. So, but people find Harvard more impressive. Therefore, another reason to be loved. And I told my mom, I'm like, now will you love me more? Now you have to love me, Daddy. You're like, son. So anyways, it's just funny. But it's truthful. Okay. So Bitcoin, check this out. We've dropped 50% now. Hey, made it. That's pretty fun. John, I think every president walks in with plans and comes out bitterly disappointed. I think everyone goes in to change the world, comes out very disappointed. There's that love. Thank you. Disappointed dead. Well, luckily it's not too many dead. Okay, and now I back out and check it out, guys. All we're doing is playing this stupid little thing. How pathetic. So the way I teach you is, so going back to like, this is what we talked about here, that I thought this was going to be unjustifiably bullish, sort of fundamentally, but because of how the month is opening, it would do this and then come down between the Wednesdays. Okay? And so I'd rather have plans. I'd rather make plans and that involve like big moves. I don't like pissing around with like this stupid little pissy little candle. Okay? I mean, that's the funny part. And what percentage of the 95% that failed focus on that little tiny candle, right? But whatever. So what they're looking at is, as long as you're higher than here, and I would argue more conservatively, how funny, but I would argue you probably want to really be off these lows, okay? And with that said, what these traders are thinking is this. I'm probably more like that, okay? But even then, that's even just one little pissy little day trade, right? They're not long, beautiful, fundamental trends. And that's what I'd rather you start with. So that's when you do the swing trading course, we start a monthly, then we work our way into daily, then monthly, then we work into weekly, then we work into daily, and now everyone in the group is working on sessions. How to buy and sell the London Open, how to buy and sell the New York Open. Okay? But the real money is knowing what's going to happen in June and doing that and walking away. Okay. What are my thoughts about Bitcoin long term? I don't have any thoughts about Bitcoin long term. Cool. So this one we have to shift. We've already hit our weekly target like most of them. So you just got to shift your indicator and find out this, and this is what I was talking about as far as the month of June, the unusually higher high into massive profit taking. So I figured this might move fast. So again, what we were talking about on Sunday, and I've done this with every pair, so I'm just repeating myself, but it's important. Okay, an unusually fast up, and then an unusually fast potential change in trend. And that has nothing to do with this chart, nothing to do with the indicators, nothing to do with anything except maybe some behavioral. Finance, which just means based on what I think traders are going to do. Traders, not the market, traders. And I'll end it with this. You hear in the media that the economy looks like this and the market looks like this. So I guess what I'm saying is the market's going to shift a little bit, and maybe over the next several weeks or months, you'll start to get a little bit of this, and we'll start to get a little bit of that. Okay? So imagine you have essentially a MACD between the market and the economy. Based on what I think traders are going to do in the next few weeks, there'll be a convergence, not a divergence. Okay? Cool. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for being a subscriber of Forex.Today. Thank you for being a client of tradersway.com. If you need access to my book, it's in the description below. If you need access to my chart templates, the link is in the description below. A link to Traders Way is below. A link to FX Bootcamp's YouTube channel is below. A link to my trading courses. By the way, they're right now almost 80% off. I'm raising the price probably Monday. No joke. So there you go. Be there, whatever. So all the links to everything you ever needed are below. People have asked me over the course of 20 years to help them with further resources. So I've already created those resources for you. Okay? So, thank you again for everything you do. Peace on earth. May the pips be with you. May your profits be above average. And if it's not too much, would you please click the like button? Simply tell YouTube this was